Welcome to The Property Code. I am Nick, and today we are diving into one of the most crucial and misunderstood topics in the real estate world: how to get investors for real estate. In 2025, the search demand for this question has exploded. People type how to find investors for real estate, how to raise capital, real estate syndication explained, investor pitch examples, and how to attract private money for deals. Behind those searches is one universal challenge: how to build trust and structure opportunities when you do not yet have a long track record. To make this real, let me tell you about Camille. She is a 36-year-old architect from Atlanta who spent a decade designing buildings for other developers. Every time she saw a new project break ground, she thought, if I just had capital, I could do this myself. In 2024, she decided that waiting for a perfect investor to find her was a fantasy. She would learn to attract them. Her goal for 2025 was to fund her first small development, a 3-unit infill project on a quiet residential street. She had the skill, the plan, and the drive. What she needed was belief from others and from herself. The first thing Camille learned was that no one invests in deals. They invest in people who can run deals. Her early mistake was focusing every conversation on blueprints, finishes, and projected profits. What potential investors really wanted to know was whether she could navigate surprises, communicate clearly, and protect their downside. So she began reframing her pitch. Instead of leading with, "Here's the return," she started with, "Here's how I mitigate risk." That single pivot transformed her credibility. Investors do not chase hype, they chase predictability wrapped in competence. In 2025, the investor landscape looks different than it did just a few years ago. The traditional model, networking events, printed flyers, and cold emails, is fading. Now the deal flow lives online. Accredited investors gather on digital platforms, family offices browse verified deal portals, and crowdfunding syndications have matured into professional ecosystems regulated by the Securities and Exchange Commission. For small operators, that means you can access capital if you understand how to speak the language of transparency. Camille studied Regulation D and Regulation CF, the two main legal frameworks that govern how you can raise private money. She learned the difference between a public solicitation and a private offering, and how to stay compliant while still marketing her project effectively. Her first capital came not from strangers, but from her own professional circle. She made a list of everyone who already trusted her judgment: former clients, contractors, engineers, and even mentors from her architecture firm. She invited them to coffee, not to sell them, but to share her vision. She showed them a pro forma that included conservative numbers, realistic construction costs, and contingency reserves. She explained that her goal was to deliver a modest but steady return, not to chase fantasy profits. When people sense sincerity, they lower their guard. Within 2 months, 2 colleagues committed to small investments. They were not funding the entire project, but they gave her momentum, the most powerful currency in capital raising. She also discovered that stories travel faster than spreadsheets. She began posting progress updates on social media, showing the property, zoning approvals, and even her late nights reviewing city permits. Every post ended with a subtle call to curiosity. If you want to learn how small infill developments like this get financed, let's connect. Those words opened conversations with other professionals who had money but lacked the time or knowledge to invest directly. By being visible, she became credible. Technology made her reach scalable. Investor relations platforms now allow small developers to create branded portals where investors can log in, review offering documents, track progress, and receive quarterly updates. It is the same experience that institutional investors expect, now available to boutique operators. Camille used one of these platforms to organize documents, track commitments, and send automated distributions. That infrastructure made her look like a seasoned sponsor. even before she closed her first deal. The deeper she went, the more she realized that attracting investors is not a one-time event. It is a relationship ecosystem. Trust compounds just like capital. Her transparency became her marketing. When construction costs rose, she told investors immediately and explained her cost control plan. When weather-delayed foundation work, she sent photos and adjusted timelines. Investors appreciated the honesty more than perfect forecasts. That consistency turned first-time backers into repeat partners. By mid-year, Camille had raised $500,000, enough to complete her project with a conservative cushion. She structured the deal as a simple equity partnership. Each investor received a preferred return of 8%, meaning they got paid before she took profits. Above that, profits were split 60-40 in her favor, reflecting her sweat equity and management role. It was fair, clear, and easy to explain. She also learned that diversification attracts investors. Instead of promising the same structure for every deal, she created options. Some investors preferred debt positions, a fixed return with less risk, while others wanted equity for upside potential. By tailoring offers to different risk appetites, she expanded her base without compromising her integrity. The trends of 2025 make this even more dynamic. Real estate tokenization has begun merging with private equity models, allowing verified investors to purchase fractional shares of specific projects on blockchain-backed platforms. It is still an emerging space, but it points to a future where small operators can raise capital globally while maintaining compliance. Investors can track distributions, verify ownership, and trade their shares more easily. For developers, it means liquidity. For investors, it means control. At the same time, traditional relationship capital is still king. Local investors, small business owners, and high-income professionals often look for ways to diversify outside of stocks and mutual funds. They are not hunting for flash. They want steady returns backed by tangible assets. To reach them, Camille joined local chambers of commerce, attended real estate meetups, and spoke at a community college entrepreneurship class about small-scale development. Every room she entered became a seedbed for future partnerships. Her second project attracted attention from a small family office that had seen her updates online. They were impressed not by size, but by her system. She had checklists, processes, and communication protocols that mirrored what they used internally. They offered to fund her next development entirely with the option to scale. Within 18 months, Camille had gone from solo architect to managing partner in a development firm. Her investors were not charity, they were collaborators. If you are trying to get investors for your real estate deals in 2025, start with 3 truths. First, your reputation is the collateral that funds your future. Guard it with ruthless transparency. Second, learn the legal frameworks before you raise a dollar. The world does not forgive ignorance when money crosses hands. Third, build your investor experience as carefully as your project itself. A clean presentation, a clear structure, and consistent communication are worth more than any interest rate you promise. Getting investors is less about selling and more about aligning. You are offering people a chance to participate in something that creates homes, jobs, and long-term wealth. When you treat their capital as sacred, it multiplies. When you treat it as casual, it disappears. By the end of her journey, Camille looked back and realized that every investor she gained reflected a version of herself, someone who wanted to believe in a real plan executed by a real person. Her confidence was not built on charisma, but on competence. The small infill project became a case study in what happens when preparation meets authenticity. In the bigger picture, 2025 is the year of alignment in real estate capital. Technology has democratized access, but relationships still decide who gets funded. Those who blend credibility with clarity will raise capital faster than those chasing trends. The investors are out there. They are looking for operators who respect the money and understand the mission. So if you are sitting on a dream deal, stop waiting for luck. Build your story, learn your numbers, and start having real conversations. The capital will follow the clarity.